Stop struggling with EURUSD. Here is exactly what the smart money is doing right now. Please watch the full video. Looking at the 1-hour chart, the market structure has shifted significantly. After a strong distribution phase at the 1.1850 supply level, we saw a clear bearish break of structure. We are now officially in a series of lower highs and lower lows, meaning the primary trend is firmly red. The current upward move you see is not a trend reversal. It is simply a technical retracement or a pullback into supply before the next major impulsive drop begins. We have three major areas where the big banks and institutional players are likely to sell. First, 1.1760 to 1.1780, which is our immediate intraday sell zone. This area caused the recent bearish continuation and remains a very high probability rejection area. Second, 1.1780 to 1.1800, a point of interest backed by previous market structure and significant price imbalance. Finally, 1.1840 to 1.1860, the actual origin of the entire downward move. If price reaches this high, expect a massive institutional rejection. On the flip side, we have demand at 1.1670, but it is looking weak as it has already been mitigated. The real buyer strength lies much lower down at 1.1640 to 1.1660. Our overall bias remains heavily bearish. The strategy is simple. Sell the rally. Wait for the price to tap into the 1.1740 to 1.1780 supply zone. Once we see a rejection candle, we aim for targets at 1.1700, 1.1670, and finally 1.1640. Set your stop loss above 1.1805 to stay safe. Do not chase the price in the middle of the range. Only take the trade if it hits our zones. If we see a strong break above 1.1780, only then will we flip our bias to bullish. Trade smart